Welcome back to Good Revenue. We're tracking some stories across the economy, the accelerating pace of change in technology, and private markets. Links to everything that we discuss are in the show notes, as always. So let's dive right in. First of all, trade wars and economic warning signs abound. Trade and tariffs remain a huge issue. We did a deep dive episode encompassing strategic implications 2 weeks ago with Ambassador Demetrius Morantis. I highly recommend the episode if you are looking for a broader perspective and some deeper understanding about the context in which this trade policy is being enacted. We're also expecting additional reciprocal tariffs on April 2nd, so we'll be back to talk about that more with another expert soon. These tariffs are already reshaping global trade. So just a quick recap. We're at 25% tariffs on Canadian and Mexican goods with a small stay for Mexico and the exact opposite for Canada. There's an additional 10% tariff on Canadian energy, and Canada has understandably retaliated. So they have imposed 25% counter tariffs on $30 billion of US goods and threatening to expand that to $155 billion. So this is not great in terms of relations with our largest trading partner and a country with which we have had a long-standing and very successful partnership. It is a border that we don't have to guard in the same way that we do our southern border. And in a lot of ways, it's just an incredibly productive and successful relationship. And it's so sad to see the state that it's in right now. That's my take on it. China is also the subject of tariffs. Import tariffs have increased from 10 to 20% against China. And they've responded with tariffs of 15% on U.S. agricultural imports and some other things. The EU is also planning $28 billion of counter tariffs really soon. I mean, it's just a mess, and it's likely to get a lot crazier in the near term. These tensions are also coinciding with really troubling job market signals. U.S. employers announced 172,000 job cuts in February. That's the highest total since 2009, and a 245% increase from job cuts in January. Government cuts led that total, more than 62,000 positions being eliminated. Compare that with just 151 positions that were cut in February of 2024. These numbers suggest serious and broad economic challenges ahead. In addition, if you're monitoring the general state of the federal government here in the United States, among all of the agency closures and job cuts, a few things you might want to keep an eye on. The administration has also fired 2 of the directors of the Federal Trade Commission. That is an agency that does a lot of consumer protection work, among other issues like antitrust enforcement. So that's a serious one. And another one, which may not be on your radar, is that the head of the Federal Housing Administration has fired most of the board that governs Fannie Mae and Freddie Mac. You might not be familiar with those agencies, but they are responsible for the U.S. mortgage market. It's a massive market, and they're quasi-governmental entities that are responsible for making sure that Americans can get 30-year loans, among other things. Finally, the Federal Reserve chose not to cut interest rates. So we're staying where we are right now. However, it's very clear that there's going to be nothing but chaos ahead, certainly a level of unpredictability that's making it very difficult for business to plan and keeping a lot of us glued to the news. Next, we wanted to get into some news around AI. We've been talking about this topic quite a bit recently and wanted to flag some stories in case they haven't crossed your radar yet. First, robots are talking to each other without us. This one really jumps to the top of my list of things I didn't want to have to worry about, but now I do. In case you missed it, a couple weeks ago at the 11 Labs hackathon in London, 2 AI systems began communicating in English, but they switched to a mode called Gibberlink. I hope I'm pronouncing that right. If it's Gibberlink, sorry. Two AI systems began a conversation with each other in English, but then they switched to their own language once they recognized that they were two AI agents. And there's a video of this circulating the internet that I recommend taking a look at. On the one hand, it seems very calm. The two machines can be seen on screen. You can hear an audio that really sounds like a robot from a science fiction movie. But at the same time, the screen has captions that supposedly cover the scope of the conversation that the robots are having. The real question raised by observers and researchers studying this is, do we actually know what the robots are saying to each other? It's hard to even say that out loud and take it seriously, but it is really serious because obviously if those robots are not actually adhering to the guidelines that humans intended, that may cause us a series of unintended problems that I'm really not sure we're ready for as a species, given everything else we're tackling. So this is something that, while I think it's interesting that two AI entities can communicate with each other, and I certainly understand the argument for efficiency, but I think there's another argument here, which is how do we know what the communication is, and at what point does that communication supersede any guardrails or the intention of the humans that originally conceived of those AI entities? And furthermore, what happens if AI makes choices that is in conflict with what we as humans might want? That's a big one. Speaking of AI, AI is also changing how we think. Another story you might want to know about. In January 2025, a study found troubling correlations between AI tool use and declining critical thinking skills. Researchers identified a strong negative correlation between AI usage and critical thinking abilities. The more people relied on AI tools, the lower their measured critical thinking skills became in this study. The study also found substantial evidence of cognitive offloading, which means that users increasingly were relying on external tools for thinking tasks instead of using their own mental resources. Multiple regression analyses in the study show that this effect actually persists even when controlling for education levels and engagement. So this isn't just about different types of people using AI. The AI usage itself appears to be changing how people think. This most recent study builds on some findings that were released in 2024. A study examined AI chatbots' unique impact on cognition. Unlike static information sources, chatbots emulate conversation and adapt to users. This creates a distinctive type of cognitive reliance that differs from previous technologies. There's another study that you might want to take a look at too. This one's from 2023, and it found that risks of over-reliance on AI tools like ChatGPT also exist. Users showed reduced capacity for critical thinking and declining memory retention with heavy AI dependence. So the conclusion across all of this is that researchers are emphasizing across these studies that AI should really supplement rather than replace human cognitive functions. So these tools may have a lot of benefits, but we might want to keep in mind how the tools are also training us and changing how our brains operate in ways that we're just beginning to understand. Continuing our theme of AI, Chinese AI is challenging US dominance. So we're back here talking about DeepSeek again. A study was just released by CSIS. It's a think tank based in Washington, D.C., and it's highly respected in the security community. So according to CSIS, DeepSeek's technological advancements aren't really surprising in terms of performance. They are incremental and they are expected in some ways. What was shocking to the researchers, which might not be shocking to you, is that Western observers were surprised to see these advancements coming out of a lab in China, despite export controls. Western researchers have been able to verify that these innovations are in fact genuine, and they note that the success of DeepSeek is actually reflective of flaws in export control policy. AI chip export controls from 2022 were partially addressed in 2023, but some have argued that there are still some gaps that may be anti-competitive for the United States. DeepSeek CEO still calls export controls his greatest challenge, but they have clearly found workarounds through computational efficiency that could ironically benefit U.S. firms with larger computing resources, according to CSIS. The concerning aspect is that DeepSeek's success in distilling U.S. AI models doesn't involve IP protections, and we've talked about that in a prior episode. So this suggests that AI development may follow a model that is found in the pharmaceutical sector, which is that enormous development costs are borne by the United States or by manufacturers in the West, with relatively cheap replication possible in other countries like China. So even with export controls becoming more aggressive in the US, the American lead in AI has narrowed, and the competition is rapidly intensifying across the globe, but particularly between the US and China. Next, AI researchers don't think that we're on the right track if the goal is AGI. Here's the final twist in our AI stories for today. A survey of 475 AI researchers found that 76% of them don't think scaling up our current AI approaches is actually going to lead to artificial general intelligence, or AGI. A general purpose AI that matches or surpasses human cognition is the goal of many entities, including OpenAI. And what these researchers are telling us is that while incremental progress is being made, these efforts are unlikely to actually yield AGI. Something to keep in mind. Last, let's get back into startup land, one of my favorite topics. But startup land this week had some absolutely wild news in the area of espionage. I bet you didn't think I was going to say that, and consolidation. The high stakes competition isn't just limited to nation states these days. In startup land, HR company Rippling filed a dramatic lawsuit against a competitor called Deel, alleging corporate espionage. The 50-page complaint is a wild read if you wanted to check out a lawsuit this week. It claims that Deel planted a spy within Rippling to steal trade secrets, and when confronted, the alleged spy reportedly attempted to hide their phone in a bathroom before fleeing the premises. Both companies have traded accusations about the evasion of sanctions in Russia, among other claims, and this appears to be really emblematic of the fact that the HR technology space is super competitive and tensions have really escalated through public campaigns and accusations. Another trend that is emerging in startup land has to do with acquisitions. We've talked about the dire straits of startup economics on a couple prior episodes. And as public tech companies have slowed their purchasing of startups, venture-backed companies are stepping up to buy other startups. According to PitchBook, over a third of U.S. startup acquisitions in 2024 involved another VC-backed company as the buyer. This proportion has increased yearly since 2018, rising from about 20% to 33% in this last year. This trend is basically being fueled by late-stage startups that are staying private longer and therefore have more cash on hand, unless they're in the cohort where they're burning through it too quickly and they don't have any cash and they don't have any options in terms of raising it, which is what we've talked about before. There were an estimated 956 sales of venture-backed companies last year, the fourth highest level on record. This consolidation is also causing a really interesting new dynamic where stronger startups are acquiring weaker ones, but it also raises the question of whether or not this is a situation where the same venture capitalists are actually just buying up their own prior investments that have gone south. Stay tuned as we see what happens as a result of all of this. The last thing we wanted to just touch on is private equity. According to a recent report from Bain, 2024 can be seen as a year of partial relief on the path of private equity. As interest rates and inflation have come down, economic growth has been relatively stable. This report was released before this past month, so Bain might have a different opinion about this now. All of this activity has led to increased deal investment and exit value. However, they note that fundraising was weak and that it's a lagging indicator. The real issue that Bain notes is persistent liquidity is a problem for global LPs. Exits grew, but distributions of share of net asset value dropped to a decade low. So pending stabilization of markets and perhaps a reduction in interest rates, Bain is optimistic for the private equity sector. But as we mentioned at the top of this episode, things are anything but predictable right now. And so I have no doubt that both private equity and venture capital will continue to see some really interesting times in the short run and perhaps in the long run. Thanks so much for tuning in today. We will see you here soon. Thanks for listening. If you liked what you heard, leave us a review, subscribe to the show, or check out another episode. We appreciate your support.